Okay, I just recently made an investment decision to buy some stock in Alphabet, which is formerly known as Google. So I'm basically going to walk through or kind of try to mind map my decision to buy uh, Alphabet stock, and I'm going to try to mind map it or try to come to my decision by answering what I think are eight fundamental questions that you need to ask yourself and need to answer when you're evaluating a stock. So let's give it a shot. Let's try it out. So the first question I want to understand is, what is Google? What are they about? What's their value proposition? So when I think of Google, essentially, initially, well, the Google we all know of and when it originally came out was, if you remember way back in the day, we had the whole concept of encyclopedias. And it really is, when I think of Google, it's really the Encyclopedia Britannica of the 21st century. So, like any information or topic or on anything, uh, go to Google, type in the search term, you get your information. So that's traditionally the core business of Google. But over the years, obviously they've branched out into other areas, and so it's not just word based information; it's video. So when you think of Google, it's YouTube. We also think of mobile and the whole concept of Android. And those have been really the core areas, the core businesses of the company. But the other area that they've really evolved in quite a bit in the last few years is it really is in the hardware side of it. And specifically, they've got into areas like the Nest products, the thermostats, the video cameras. And just recently, they got into cell phones. They started making their own cell phones, Pixel camera. And then also, they just recently announced their sort of equivalent with the Amazon Alexa, the Google Home product. So those are some of the core areas, of course, types of the business lines. But really, what it comes down to, what's their value proposition? It's all about what they're trying to do is really create an ecosystem, kind of in the same fashion of Apple, but it's kind of an ecosystem to manage your daily actions. You know, booking a reservation for a hotel, playing music, playing video, watching TV. Google wants to be the hub, wants to be that hub of your daily interactions. So that's their value proposition. Now, the question is, who buys this stuff? Who buys Google? Well, if you're a human being with any element of curiosity, you're going to be interacting and using some of Google's products. So basically, anybody on the planet, any human being, could be a customer for Google. You can break it down to the point where, if you're a kid doing homework, you're going to use the search. If you're looking for video to learn how to do something, you can go to YouTube. If you're going to communicate with your friends, family, send messages, you're going to use the Android side of it. So really, the whole element of Google is anybody can get any value out of the various product lines. So it's a very wide and huge scope. Um, who are the customer? Who are they going to compete with? Well, essentially, what they're trying to do is they're trying to build their own ecosystem and compete with other major companies that are building their own ecosystem. So their competition would essentially be like Apple, Facebook, Amazon. Those would be and also Microsoft. I would put Microsoft in there too. So it's a pretty intense area of competition that they're involved with. That Google is, and I'm calling them Google. They're obviously the formal name is Alphabet. So, and the question is, will they come back? Well, as long as there's curiosity, there's just that potential for continuous cash flow generation, continuous revenue, continuous growth there. And as the company seems to be evolving and shifting in way towards building sort of the Apple model of building an ecosystem, it's an interesting concept. It's an interesting composition there. So next question I want to ask yourself is, that's really cool and that's great, but they making any money out of all this stuff? And the answer to that is, they seem to be making insane cash. If you look at the return on invested capital, it's coming in at about 45%, which is really, really good. Their cost of capital comes in at about 10%. So they're creating really, really high economic profit, which is great. They're creating tangible wealth. And as investors, that's what I want to see. I want to invest in companies that are making really good tangible wealth. And these guys are making a ridiculous tangible wealth. Let's look at the financials. What's their balance sheet looking like? Well, if I look at the balance sheet right now, based on most recent stuff I've seen, they have 4 times as much current assets as they do current liabilities. So they got a lot of liquidity. This company's not going bankrupt anytime soon. If you go even a little bit deeper, they have about $73 billion in cash versus about $2 billion in debt. So they're fine. They're financially strong. Now, risks. As much as this company is creating really tangible wealth and it's got a really interesting product line, the company has risks. There's risks to this business. And one of the big ones is, their primary cash flow generator is on the search engine. So if someone comes along and builds a better search algorithm, they could be in trouble. And when you think of that, it could potentially be a Facebook, could be a Twitter. That's a potential risk. The new risk that's really facing the company also is this whole concept of misinformation. Google is basically based on information. And so we've seen in the recent U.S. election, how the whole concept of just flooding the internet with garbage can influence outcomes. And really, if people start to view or perceive Google as kind of like a raunchy tabloid kind of information hub, they're probably not going to start using it. So that's a challenge they need to address. They address the credibility of their information. So it is a risk. And another risk is really itself. It's been, as much as the one thing about this company is generating a ton of cash, but it's also been taking a lot of cash and investing it in kind of out of the back of the envelope, kind of pushing the envelope projects, and they call it the big bets. So, which are just basically money-losing ventures. So the question is, how are they, as this company evolves, are they going to, if they continue to put more and more and more money into their big bets, which generate less cash flow, that's going to be a problem. That could be a problem for the company's earnings going forward. So that's a risk. So the other question is, well, so far, there's risks associated with the company. So the next question you got to ask yourself, is the stock cheap? We've talked a lot about the company and the business, but is the stock cheap? Based on what I've seen out there, valuations have the stock price between $850 and $1,000. I bought in. My average cost was $804. So, based on the current valuations that I'm seeing out there, there is some upside. There seems to be some upside on the stock, and it really, can it get to $1,000? That the $1 million question is really. It really comes down to how the company builds out this ecosystem. If you were to just look at the company strictly as kind of that search encyclopedia kind of thing, I think the stock would be pretty overpriced, because it's just going to be really hard to sustain this level based on search. But if they can actually develop this ecosystem and really get a lot of traction and take away share from companies like Apple and Facebook and Amazon, then the potential for it to get to $1,000 is pretty good. And I think that's the thing I've always found. I've always been really hesitant to invest in Google because of that. I think price per basically been that one-trick pony. But this recent event of getting into this hardware side of it and getting to the ecosystem side of it and kind of integrating everything into it, just like kind of like being an Apple, is kind of interesting. And I thought, you know what, this is a good time maybe to put a little bit of money into it and see how it goes. So ultimately, when I look at things, when I'm evaluating everything, from a value proposition, I think the company is a pretty solid company. It's got a lot of customers. It's got a lot of competition, but I think it can deal with it. It's printing a lot of money. It's profitable. It's got a really solid balance sheet, very minimal debt, and despite the fact that there are risks, this is a company that's kind of creatively, constantly regenerating itself, has a lot of really talented people. It can manage those risks, and the stock appears to be cheap. So when I factored all these elements together, it made me come down to the decision to buy. And so that's my analysis. That's sort of my mind map in terms of how I came about to my decision to buy some stock in Alphabet.